Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Gujarat Narmada Valley Fertilizers and Chemicals Limited, hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akul Broachwala from IIFL Securities. Thank you, and over to you, sir.
Thank you, Stephen. Ladies and gentlemen, good afternoon, and thank you for joining us on the 4Q FY22 earnings conference call of Gujarat Narmada Valley Fertilizers and Chemicals Limited. It's my pleasure to introduce the company's senior management who are here with us to discuss the results. We have with us Mr. D.V. Parekh, CFO, Mr. Y.N. Patel, GM Operations, Mr. A.C. Shah, Company Secretary, Mr. M.I. Patel, Marketing Head, Fertilizer Division, and Mr. Jiten Desai, Head, Industrial Chemicals Division. We'll begin the call with opening remarks by the management team, and thereafter we'll open the call for a Q&A session. I would now like to hand over the call to the management and take proceedings forward. Thank you, and over to you, gentlemen.
Are we audible now?
Yes, sir, you are audible. Please proceed.
Okay. Thank you very much to the organizer. Now, just as a word of caution, since everybody is identifying themselves, we would like to identify ourselves before the responses begin to each question. This year 21-22 actually started with a severe impact of pandemic, which subsided around second quarter of the financial year. So after the first half, when it subsided, the inflationary effects started showing up, and which was exacerbated by Russia-Ukraine war somewhere around late February 22. Thereafter, the input prices, which were already on the high rise, have been on the boil, especially that of gas and oil. As of now, the run-up in the oil still continues, but the gas is tapering down. Gas prices are dependent now for a future on the decision of Europe on the Russian gas supplies. So this is the environment under which most countries and businesses operated. This has very severe impact on the country's finances, especially those which were not having natural resources with them. This has affected businesses also in different ways, although our business was protected one from the input cost rises, although it was witnessed, but finally a delta is maintained in terms of margin, and margin could also be enhanced because of the competitive position and pricing opportunities which were there. Now, talking about the industry in which we are operating, touching upon the fertilizer first, the country saw around 10-11% decrease in the consumption in the overall different types of fertilizer, like which comprise of urea, DAP, NPKs, MOP, and SSP. The total demand of 60 million metric ton has been there during 21-22. As far as domestic production is concerned, except the NPKs, the domestic production of most, that is DAP is stagnant, but urea and SSP has increased, whereas the imports have across the board decreased. This is mainly because of the high prices of fertilizer. On the subsidy front, the subsidy of Government of India, which was budgeted at around 80,000 crores, has increased to 150,000 crores. The budget for 23-24 is 105,000 crores. It all depends upon how the prices really move going forward. Now, in terms of the subsidy rates, government has revised the subsidy rate last year effective 20th May for the NBS, which was again kept at the same rates effective 1st of October. So there was a tremendous government support as far as NBS subsidy rates were concerned. As far as subsidy payout is concerned, there is a substantial payout happening month on month, and it has not tapered even in the last quarter of the calendar. Until March, subsidy has been released. The total release of subsidy has helped the company also, and our outstanding has just inched up by around 200 crore, mainly because of the higher gas prices. Otherwise, all the subsidy demands or the claims have been met by the government. On industrial chemical front, across the board imports have increased except a minor change in weak nitric acid. Most of the chemical imports have increased, and in spite of that, the volumes sold have been higher by around 9%. This shows the company's competitive position in terms of pricing and reach. So this is the background. Now, touching upon the financials, as you know, the total revenue from operations has gone up by around 69% and PBT has gone up by 142%. In terms of balance sheet, there is a healthy balance sheet with a reserve of 7,900 close to 7,900 crore, and company has a cash chest of around 3,500 crore with it. Cash flows have been very healthy. Cash flow has been hovering around 1,700 crore plus during the FY21-22. This is mainly on account of the time release of subsidy as well as internal accruals. So by and large, these are the financial. On the capex front, we have already covered certain part in the media release. But during last year and the April 1, there are two facilities which have been operated. One is the TDI2 debottlenecking, which will increase the volume by around 10,000 metric ton per annum. And second is the formic acid, which will increase the volume by around 6,800 metric ton per annum. This year, there are two other projects which are going to be operational. One is the 4 megawatt solar power plant, which is around third quarter of calendar year FY22-23. And another is the CNF4 with a capacity of 50,000 metric ton, which is also likely to be operational around the same time. Apart from that, there is a capital outlay of 4,250 crore, which is already identified, out of which capex worth 1,350 is already on course, and capex worth 2,900 crore are at an advanced stage of approval. Out of 2,900 crore, around 2,500 pertains to polycarbonate and 400 crores pertain to green hydrogen. So this is by and large the outline of what the company has done and what company intends to do. The last is on the outlook. Although we don't make forward-looking statement, but currently the outlook is stable. More things will be covered by my colleagues from marketing, both fertilizer as well as industrial product, and our people from operation group who is handling the strategy part as well. So with this, I hand over the call back to the organizer for the Q&A session. Thank you very much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav Jimudia from Anvil Research. Please go ahead.
Sir, good afternoon, team. So, sir, I have two questions. So, one is on our P&L. So, if we see this quarterly result, I think our raw material cost was up 160 crores, but sales was almost up 400 crores. So, how much it was contributed by the volume increase? So, that is number one. And if you can just talk about of our some of the basic raw materials for our chemical division like natural gas or toluene. So what was the average cost of natural gas for this quarter, and how those contracts are generally with our suppliers of natural gas? So are those on long-term contract basis, or do we buy some natural gas on the spot basis also? If you can just touch upon those aspects, sir.
Okay. So first, the last question we take up first. As far as contractual arrangement of natural gas is concerned, the contractual arrangement normally exists for the urea gas partly. We have certain contracts wherein part of the requirement is met through the long-term and mid-term contracts. The rest of the natural gas is sold more or less on spot basis. The requirement is mainly for the non-urea. The requirement is little lower at Bharuch complex and relatively higher at Dahej complex. Dahej complex, the operational maturity we are yet to gain, so we are not having the take or pay agreement kind of long-term arrangement as of now. As far as the cost part is concerned, the Dahej natural gas prices have gone up by 116%, whereas at Bharuch it has gone up by around 31%. Bharuch we use mainly for methanol, and methanol is, as you know, we sell also as well as a captive for acetic acid. Yeah. So when cost economics don't work out, we purchase from outside. Okay. As far as the increases in toluene and other part is concerned, see, all raw materials have increased in the range from 10 to 100%. If you take oil, it has increased by 57%. If you take gas as such, the non-urea gas taken together, it is around 116%. And there are different ranges for different materials.
Okay. But sir, this gas price increase, what you mentioned of 116%, that is on YOY basis, or this is what you are talking about?
YOY basis.
Okay.
That's a YOY basis.
Okay.
On a YOY Q4, yeah, the increase is around 200%.
Okay. So if you can just quantify like how much it is in terms of rupees per SCM, the cost in Q4, what we have actually incurred.
That is already part of the investor presentation. If you look at the spread which we have given between methanol and gas price, it is mentioned at 31 rupees, which is a Bharuch complex.
Okay.
And it is 49 rupees at Dahej complex. This is a weighted average on a year-to-year basis.
Okay. Okay. And sir, if you can just quantify in terms of our MMSCMD requirement of natural gas, both for the chemical division as well as for the fertilizer business.
Okay. See, there are two complexes which we operate. One is Dahej, one is Bharuch. Dahej we require roughly in the range of 200,000 to 25,000 SCM per day when the plant is in full operation. At Bharuch, the requirement is mainly for urea and non-urea. The urea requirement is around 1.25 million SCM a day. And the non-urea requirement depends upon whether the cost economics work out or not. But given the full swing of operation, it ranges between 0.5 million to 0.6 million at the max.
Okay. Sir, second question is on our expansion of concentrated nitric acid. So, would there be, so this concentrated nitric acid, some portion would be used for our TDI expansion. So, rest would be sold in the outside market. Is it the right assumption, sir?
Yes, you are right.
Okay.
It's a right assumption.
Okay. But sir, then we would also require weak nitric acid for this concentrated nitric acid. So do we have those sufficient capacity with us, or the commissioning of CNA would be along with the WNA capacity which we have announced as a part of our expansion project?
See, there are timing mismatches as of now between WNA and CNA, but meanwhile our team is trying to tie up the weak nitric acid.
Okay.
And secondly, we have some product mix options available whereby we can cater to the requirement of additional weak nitric acid. These are the three options as of now with us.
Okay, okay. And sir, one clarification on the sequential improvement of 400 crores in the top line, what we have seen. So, what were the major products which has contributed to this?
AN melt, weak nitric acid, technical grade urea. These are the three main products.
Okay.
And my colleague will cover more on the subject.
Okay.
Now I hand it over to Sri Jiten Desai, who is looking into the IP marketing side.
Yeah.
Good afternoon.
Yeah.
As CFO sir has told, these are the three products which has contributed increase in contribution or increase in income of these products is significant, and other products also have contributed. Those are aniline also has observed the growth, concentrated nitric acid, formic acid, ethyl acetate and acetic acid also have observed the growth.
Okay. Okay. And sir, Mr. Jiten, sir, if you can share your outlook on aniline as well as CNA, that would be helpful, sir. This is my last question.
Yeah, CNA is not an importable commodity, and downstream units of concentrated nitric acid the growth rate is very significant, and consumers are required more and more concentrated nitric acid.
Yeah.
So for CNA, it is going forward also, it will remain strong.
Okay.
And as far as aniline is concerned, my colleague Mr. Manish Upadhyay will respond.
Aniline growth is also expected to be high because there are a couple of big companies, big consumer like NoSeal as well as the RT, they are expanding with the capacity. So the consumption will be on a higher side.
Okay.
And we expect good demand also in coming this year also.
Okay. Thanks a lot, sir, for answering the questions. I'll join back in the queue if any.
Thank you. The next question is from the line of Ashish Agarwal, an individual investor. Please go ahead.
Hello.
Yes.
Am I audible?
Yes, please. Please go ahead.
Yeah, thanks. First of all, congratulations on a good set of numbers. And as I've seen, the MD also gave a expectation in that in the coming quarter we will maintain margin. My question was more specific to the polycarbonate and the green hydrogen. Can you elaborate more as to did we analyze this, and when will this come live? As to when will the cash flow happen, when will the CWIP happen, and when these facilities will come live, and what would be the typical revenue out of it?
Naam. Yeah, our colleague Mr. Ryan Patel, head of operations, will respond to this, please.
Green hydrogen, as of now, we have taken approval from our board for inviting expression of interest from various parties. As of now, mostly green hydrogen plants are based on electrolytes, where technology is already developed, but this is an age-old technology. There is nothing new in this technology. But since, COP26, there are so many players coming out with various alternatives, and as of today, nobody has concrete proven technology. But anyway, we are going ahead with this project with 2.12 metric ton of hydrogen, green hydrogen. And along with this, we will be needing 25 megawatt solar power plant, that is renewable energy. So we will be going for 25 megawatt solar power plant. And regarding polycarbonate, we have already very recently received market survey, which is very promising. So we are going ahead with investment of 2,500. It will be in the range of 2,500 to 2,900, and that will be at the Dahej location.
Okay.
And this capacity will be around 1 lakh metric ton per annum. And as of today, there is no producer of polycarbonate in this country. And looking to the history, we have observed that various organizations have attempted for this project, but because of involvement of phosgene, mostly people have dropped this project. Since we have expertise in handling phosgene in our TDI-1 as well as TDI-2, we are moving ahead with this project.
And how much would be the typical demand in India for this polycarbonate?
Polycarbonate demand, as per our perception of marketing, it is growing at the rate of 9% CAGR.
And today, how much it would be?
Pardon?
Today, how much is
Today,
Today around 1.8 lakh metric ton is imported in the country.
Okay, great.
And as of now, there is no producer of polycarbonate in the country.
Got it.
These are basically the import substitutes. As far as your question on green hydrogen is concerned, it is more to meet with the regulatory framework. And there are certain obligations which central government has come up with, that those who are producing from fossil fuel will have to meet certain percentage out of green hydrogen. These are not formally announced, but then we are doing the preparatory work, and we are going ahead with 25 megawatt of solar backup facility for that.
Okay, sir. And typically, when will the groundwork start for this polycarbonate and the green hydrogen project? Will it start in the coming year? Will we see some cash flow getting into these projects in the coming year?
See, right now
Hello?
So, I am Yogesh Patel, answering your question. Regarding polycarbonate, we already have encouraging market survey report from third party, which is supporting perception of our IP marketing group. We will be conducting this TEFR, which will take 3 to 4 months. Based on that, we will move ahead with management approval and we will then take up the project. Normally, this type of project takes at least 36 months for implementation.
Okay. Thank you, sir. That was my question. That's it. Thank you.
Thank you. The next question is from the line of Nitesh Dhoot from Prabhudas Lilladher. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is on the cash flow statement, which indicates that a corporate deposit of 2,000 crores has been made. So if you could just share which corporate is this where you've made this deposit?
We have Gujarat Government's Financial Service Corporation called GSFS. We have made a deposit with them of 2,400 crore. Gujarat State Financial Services is the name, which is a Government of Gujarat controlled entity. Control owned. Both.
Sure, thanks. My next question is, with the prices of acetic acid, TDI, etc., undergoing some correction. Even as the oil, gas, methanol, toluene, and all the other input prices rising or are firm. So would it be impacting spreads for the company? And if so, would it be fair to say that Q1 of FY23, that is the current ongoing quarter, could be a slightly weaker quarter as compared to the quarter gone by, that is Q4?
Gentlemen, your voice is not pretty audible. If you can come up again.
And also request to make your question very short and crisp as far as possible, please.
So, am I audible now, sir?
Yeah, yes. Please get.
Yeah. So what I asked is, with most of the, with some of the product, the final product prices correcting, particularly acetic acid, TDI, etc., and whereas your input prices, being firm or rising, so would it be impacting spreads for the company? And would it be fair to say that the current, the ongoing quarter Q1 could be slightly weaker as compared to Q4?
Prices of Hello. Yeah, I am Jiten Desai. Good afternoon. Prices for any commodity and particularly in chemicals are cycle actually, and TDI prices is on downward trend but still persisting at a reasonably high level. Acetic acid also has observed the correction because the normal price range is around $500 to $600, which has gone up to $1,100. So I would say that it is not reducing, but it is normalizing. Prices are normalizing actually. Hello.
Sure. And on the margins, on the spreads, are we seeing a compression on the margins?
Margin and input cost increases. Okay, it is actually month-on-month scenario. Like I said in my initial statement, the oil is still on the run, whereas gas price is tapering down. There will be a mix of many factors apart from oil and gas, which will decide about the margin.
Sure. Okay. So one final question, if I may. When can we expect the weak nitric acid and the ammonium nitrate plants to come in? By which year?
I'm Vayan Patel answering your question. New weak nitric acid and AN melt will be on stream by year 2026.
Oh, 2026. Okay. That's all, sir. Thank you so much.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, we started the commission, 2 brownfield facility in current year. So, on account of that, how much additional turnover can we expect to?
See, we have started formic acid in this year, and around fourth quarter of calendar year last year, TDI 2 debottlenecking has happened.
Correct.
So on TDI, our colleague Sri Jiten Desai will respond, and on formic acid, our colleague Mr. Manish Upadhyay will respond.
Hello, good afternoon. I am Jiten Desai. With the enhancement of CNA capacity by 50,000 metric ton per year, the turnover is likely to be increased by around 300 crore.
And Manish Upadhyay, and we expect around 6,000 ton excess production in formic acid in this financial year, and roughly it will be around 4-5 crores.
Okay. And sir, this formic acid 50,000 additional capacity that we are
45 to 50 crores.
Okay. And sir, how do overall, because what gave the confidence to us that in Q1 we'll be able to sustain this spread? So some of the product it may be going down, but some of the product it may be strengthening also, could be. So what gave us the confidence that we'll be able to protect this our spread in this Q1?
We are hopeful of maintaining because of the product mix. Like you said, there are certain products which are going up, certain down. There are input price mixes and all. But on the whole, we are hopeful of maintaining margins.
So which are going up and which are just, if you can give few products away.
Gas is tapering down. Oil is still on the run. Okay, month on month, other petrochemical like toluene, benzene, etc. varies depending upon the international situation. Now, if you talk about the output prices, the weak nitric acid and melt are improving. CNA is also improving, whereas product like acetic acid is going down, TDI is going down, but it's a mix on the whole, based on which we are hopeful of maintaining the margin.
Okay. Sir, and last question, sir. In some of the facility like aniline and this acetic acid, where China is the largest manufacturer and since lockdown, they were not, in the market. So once they come into the market, how do we see impact on our company?
Okay. There are two sides to it. See, earlier also there have been like dumping or China supply issues were there. And even if it is there, like aniline, we have nitrobenzene as well as CNA available. And this year we made very good sales of nitrobenzene as well, around 74 crore rupees at a basic value. And CNA also has a good demand. So supposing there are any headwinds, in case of aniline, these are the two products we can sell and optimize the overall contribution.
Okay. Thank you very much and all the best, sir.
Thank you. The next question is from the line of Nishit Shah from Equitas Investment. Please go ahead.
Good evening, sir, and thank you for this opportunity. Sir, I would like to understand what is our cost of making ammonia.
Will you please come up again?
Cost of ammonia. So what is our cost of making ammonia?
Making ammonia. Cost of making ammonia is, as you know, we have two sources. One is NG, second is oil. So it depends upon the input prices. But last year, if you see, it ranges between 40,000 to 50,000. And gas-based ammonia also, we have a mix of gas, both domestic as well as RLNG. So on the whole, the cost is lower than based on the RLNG because of the domestic gas.
Okay. Sir, so what
it varies from month to month.
Okay. Sir, so what I understand, the spot ammonia prices would be approx $1,200. So for our cost of manufacturing ammonia through oil and gas, both would be significantly lower, right? So in that terms, how much it would be in dollar terms? For
How much it will be?
For Q4, in dollar terms, what would be our cost?
Q4 dollar terms. So we have in rupee terms, okay. Like oil price has been around 50,000.
Okay.
And from oil to ammonia, there is a specific ratio and certain added up cost. But more or less, you can say the ammonia cost in Q4 is around 50,000.
Okay. And sir, oil base would be used more for the chemicals. Is that right understanding?
It is mainly for chemicals. We do use that ammonia in fertilizer called ammonium nitrophosphate. It is not Ng-based ammonia which we use. Ng-based ammonia is exclusively used for neem-coated urea.
Okay. Okay. And sir, how do we see the natural gas prices going forward in 2023?
See, like we said in the beginning, it all depends upon Europe's decision of sourcing Russian gas, because that's a disruptor.
Okay.
Mainly the demand has increased towards that side because of certain decisions of not to source the Russian gas.
Okay. So wouldn't we have any long-term contract, even mid-term like 1 year or such contract?
Like we already covered this response in one of the earlier questions as to what kind of contractual arrangement we have for the natural gas.
Okay. Sorry, sir, I got dropped in between, so if you can, or I'll just go through the transcript, no issue, sir. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Marshall Lewis, an individual investor. Please go ahead.
Good afternoon. My first question is regarding the TDI. So can you please advise that what was the average price of TDI during the Q4, and what is the average price you can say from 1st of April to 30th April or 1st of April to 10th of May, whatever data you have. And number 2, what was the turnover of TDI standalone in the Q4?
Hello.
Hello.
TDI
Yep.
price in the month of. Hello. I am Jiten Desai. I am Jiten Desai replying your question.
Yes. Welcome.
In the Q4, the price, our price, which I will tell you in the dollar terms, that the CIF, our price largely depending on the import parity price, and the dollar price remained at an average of $2,850 CIF India during Q4. And in the month of April, it has increased. The price has increased to $3,250.
But sir, just now you said that like this, that the price is tapering down.
It is tapering down in the month of May.
Okay. So sir, what is the current price approximately?
Today it is quoted around $3,000.
So still it is higher than the Q4.
Yeah, Q4 it was higher compared to.
What I'm saying, the current price of 3,000 is still higher than the Q4 average price of 2,850.
Yes, exactly. Yeah.
Yes, sir. Very good. Second thing, sir, what was the approximate turnover of contributed by the TDI in Q4?
TDI
sales value
280 crore.
A small amount, huh? Okay.
Yeah.
And the second thing that regarding this, as this with respect to gas and this like this Europe struggling for not buying Russian gas. So are you planning to import some Russian gas, or is it feasible or not?
In fact, we source our, I'm Divi Parikh, we source our gas from domestic suppliers, not international suppliers. And in turn, they may source from Russia or anywhere. We are not much aware about their supply sources. Okay.
Okay. So sir, like as this crude price is still like going up or like is hovering around 105 to 108 or 10 or 110, and gas a little bit tapering down. So how these two things is going to impact the margin, say in the Q1 22-23?
We responded on this margin question just a couple of minutes back.
No, like I heard that you said that like you will be able to maintain margin because you have something going up, something going down. But I'm just asking with respect to the impact given by the crude. Crude is going up and this gas is coming a little bit down. So how much impact will be coming from these two aspects?
Okay. See, the normal ratio of gas and oil which we use is 1:2.5. That is 2.5 times gas we use as compared to oil. Okay.
Mm-hmm.
For example, if we use around 700 crore worth of oil, then gas is around 2.5 times of that.
Mm-hmm.
Normally.
Mm-hmm.
So when the gas prices go down, the biggest breather we get is in TDI production cost.
Mm-hmm. TDI.
Yes.
Okay.
TDI, we have the steam and hydrogen and CO requirement which is met through the natural gas.
Mm-hmm. But sir, like recently this government has increased the price of gas for Reliance about 50%. So is that a different gas than you are using? Because like it was 6.6 like this British this unit dollar to which increased to 9.6 for something. So
no. There are three types of gas prices.
Okay.
One is what government controls and announces every 6 months.
Okay.
The second is auction-based prices, which is a freedom given to companies like CAN, Reliance. Okay. And third is what is available in the spot. And fourth kind of pricing is what is there on a formula, mid-term, long-term formula-based prices. So we source our gas, especially for TDI, on a spot basis.
Mm-hmm. So like
there
when
is
the
no
government
connection with government fixed price on that.
No, sir. What I'm saying that like just to understand academically. So when the government has announced the 6 monthly price, which is valid till September by almost 50%. So should this increase will also not increase the spot price? This is my question.
Okay. I forgot to introduce. I am Devi Parikh. It has the government price which is announced 6 monthly is meant for the domestic gases, and domestic gas by design is supposed to be using urea. So this gas price increase is a pass through.
Mm-hmm. No, but sir, what I'm asking. Okay, go ahead.
For example, we receive the gas from ONGC. Okay.
Hmm.
So gas price of ONGC has, let's say, gone up by the percentage you are referring.
Mm-hmm.
This is going to be the pass-through in the form of subsidy.
Okay, so you are saying that that gas we are using only for urea or ammonia, or are we not using that gas for TDI? This is my question.
No, this is what I am saying. We can't use by the regulation this domestic gas into non-urea.
Okay. So this whatever.
Unless it is an auctioned gas, which has started off late, beginning with Reliance, followed by CAN.
Mm-hmm. So this Reliance price will also be high. I'm only trying to understand that this when the general price in the market has been increased by 40 to 50%, will this not have a cascading impact on whatever gas you are buying from whatever source? This is only my question.
No, we have not bought this kind of auctioned gas so far. Mm-hmm. Our urea gas is partly contracted, partly on spot, and TDI gas is totally on spot.
So the gas which is available in the spot is not having any bearing from this price.
No.
Okay, fair, fantastic. And sir, my other question that when we park 2,400 crore with GSFC or whatever financial corporation, what is the rate of interest on that?
5.25. Banks are paying around 5. We are getting GSFS 5.25.
So is it like
on the tenure, but for a normal tenure of a year, we are getting 5.25%.
But like this other NBFC, like for example, this Bajaj Finance or HDFC, will they not give higher rate? Suppose if you park for 2 years or something like, or maybe some a small portion we can park for different period, because the entire amount we may not also not need after 1 year. So maybe half of the amount or whatever portion we could have parked for say 2 years, fetching a higher rate with the triple A rated company.
These are companies' financial decisions, and we are comfortable with GSFS. There is an internal directive given by Energy and Petrochemical Department to park the funds, excess funds, with GSFS.
Okay. Okay, sir. Okay, sir. Great, sir. Great. Please continue, sir. Thank you. Thank you.
Thank you. The next question is from the line of Yogansh Jeswani from Mithil Analytics. Please go ahead.
Hi, sir. Thanks for the opportunity. Am I audible?
Yes, yes.
Yeah. So, sir, one follow-up on your investment in the GSFC. So, the 2,000 crore that we have parked, you said 5.25%. So, I just want to understand a bit more. Is there any lock-in for this?
No. It is withdrawable on notice, first notice. Demand.
Okay. There is no lock-in or any exit load kind of.
There is no lock-in. The only thing which might get affected is the rate of interest if you shorten and do the encashment. Lower the period for encashing in case of requirement or liquidity issues.
Understood. And so if we have to think about it, then instead of parking the money here, why didn't we try and think of something like a buyback or share? Because I think our capex plans are still till 2026, so we have couple of years, and by that time there will be significant internal accruals. So why not a liberal dividend, or even better a buyback, because buybacks are more tax efficient. So why not something on those lines?
Okay. See, dividend is already increased by 25%, and there is a maintainability which is required in case of a dividend. So these are board's approval and decisions involved. Okay. Number two, vendor financing. We do negotiate with vendors in every proposal of high value about this. But then if they have a requirement which is met through their internal accruals or other sources, then they don't opt out of it. We are trying for keeping this kind of terms during negotiation, high value negotiations.
Okay. And sir, secondly, on your capex plans that we have mentioned for WNA and the other one, so I was just going through AN2 and WNA, so I was just going through the investments. So we'll be spending 953 odd crore on WNA, and we expect a turnover of 200 crores from it. And similarly, for 182 crores AN2, we are expecting 200 crores. Then for your polycarbonate, again, on a investment of 2,500 crores, we are expecting a turnover of 1,500 crores. So in all these three, the asset turn is very, very low. Any specific reason here, or is these high margin products and that is why we'll be able to make the required returns? If you could just elaborate a bit more on this.
Yeah, my colleague will elaborate more, but see, there are two things when it comes to the weak nitric acid and AN melt. AN melt is directly a sellable product, whereas weak nitric acid has two uses. One is the captive use within AN melt and concentrated nitric acid, and second is a commercial sale. Okay, so what happens is asset turnover apparently may be low, but if you look at the probable margin improvement, the possibilities are very high, because it has a further embedded margin or value addition in AN melt and CNA.
Okay.
And the kind of payback decisions which are taken are based on these lines. What kind of captive usage is there? Supposing we don't have weak nitric acid, what happens? We cannot manufacture so much of AN melt, because that kind of weak nitric acid is not at all available. The imported quantities are minuscule.
So from the capacity that we are adding, typically how much would be internally utilized captively out of this 2 lakh?
Okay, my colleague will answer that. Mr. Vayan Patel.
See, capacity AN melt, mainly it will be going for sale totally. So there is no internal consumption as such. WNA, we will be consuming partly in AN melt. To the extent our consumption it will be around 0.6 in the range of 0.6, 0.62. This balance will be either it will be sold or we can utilize in other products also through CNA route.
Okay. And sir, if I'm not wrong, I think I don't have the FY22 numbers, but with the FY21 numbers and the historical numbers, we typically produce around 4 lakh tons of WNA, right? So out of that, how much are we selling outside and how much are we captively using now?
Okay. Generally, last year, if you want, our colleagues Jiten Desai will tell, but by and large, if you see the balance, 100 to 125,000 is one may expect in terms of commercial sale. The rest is captive. But if you want an exact number for FY21-22, I hand it over to Sri Jiten Desai.
Hello, I'm Jiten Desai. In FY21-22, we sold 1,15,000 metric ton of WNA in the market.
Okay. Okay. So, sir, but then if you are setting up a 2 lakh capacity and we are selling out 1 lakh capacity, so we do have excess capacity then, right, within the system. So couldn't we, reduce the size of this capex and probably increase capex on some other downstream product wherein the asset terms and the ratios could have been higher?
I'm D.V. Parikh. There is already a material balance. If you look at AN melt and the kind of specific consumption which is explained, that will consume around 80 to 90,000 tons of weak nitric acid. Further, CNA4, which is going to be operational, will consume another 50,000. Now we are left with only 50 to 60,000 tons of weak nitric acid for a commercial sale at the most.
Understood. That's really helpful. So last question from my end. So over the years, if we look at your key products, say for example TDI, right? So TDI as a product has seen a lot of volatility in terms of its realization. And now again, like you mentioned in your opening commentary, that the prices are a bit softer. So, and with the ADD also, again, the dynamics might have changed. So in your opinion, what is the kind of price range that you think is the sustainable price range? Or is this a kind of a commodity or chemical in which there cannot be, a sustainable range? It will be volatile. That's the nature of it. So in terms of your key products, say TDI and, one or two other products that you can help us explain, is there a sustainable range which the company can maintain, or are these products, very, very cyclical?
Okay, our IP marketing people will respond on this.
Prices, generally, I am Jiten Desai replying your question. This for chemical products, we are manufacturer of basic chemicals and most of our products are import substitute. So we have no choice but to follow the import parity pricing. And as far as range is concerned, whatever we have observed in 21-22, FY22-22, those are the phenomenally high price actually for most of our products. And it remained quite higher, about 30% to about 80% higher, ranging for different products, different range. But there will be new normal, of course. As per our opinion, it will be all the products range will find the new normal, and whatever it has remained before pre-COVID period, that will be slightly about 20% on an average basis will be higher than new normal levels. As far as TDI is concerned, if you see that about 10 years average is $2,550, the current price is around $3,000. So the new normal, in our opinion, should be anywhere between $2,700 to $2,900.
Okay, that's really helpful, sir. So if I have to summarize, basically what you're saying is, given that most of our capacities are now running at optimum capacity and in some cases above 100% utilization as well, so with the values now normalizing, the growth will be only dependent on if these prices, move up further from here, or it can actually go down by 20-30% if the prices, say revert to what the long-term trends are, right?
I'm Devi Parikh. It is not like that. There are three products like we explained. One is TDI volume increase possibility, second is formic acid, and third is concentrated nitric acid. Okay, these are the three things which will be contributing to volume going forward. Secondly, in last financial year, we have seen increased production of certain products like ethyl acetate and AN melt. That is another possibility of maintaining it in terms of volume. So volume-wise, these are the 5 products where there is a possible increase or maintainability possible of 21-22 level.
Okay, sir. Understood. That's it from my side, sir. I'll get back to you.
Thank you. The next question is from the line of Naitik Mota from Sequent Investment. Please go ahead.
Yeah. Good morning, sir, and first of all, congratulations on this great set of numbers. So just to add on to what you answered to the previous participant regarding the TDI turnover for Q4, which was somewhere around 280 crores. So out of the 2020 crores that we have posted for chemical division, the remaining 1740 crores, could you throw some light on which products have accumulated what kind of turnover for us?
Okay. Normally, we don't provide a product-wise breakup, but for information, the lion's share is that of urea and TDI. Okay, followed by acetic acid, weak nitric acid, AN melt, and likes of that. But if you want a specific figure for each of the product, as a company, normally we don't part with the product-wise number, both for revenue as well as profits.
Yeah, I understand that, sir. But the thing is, earlier TDI used to be one of the key products, and that has fetched only a smaller part of our revenue in Q4. So I was just trying to get a picture which kind of products have, which particular products have increased our share in revenue.
I'm Devi Parikh. This is already covered by our colleague. I will repeat. The AN melt, technical grade urea, weak nitric acid are the products which have contributed to the revenue as well as margin.
All right. Okay, sir. Thank you. That's it from my side.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah, namaskar, sir, and thank you for this opportunity. Sir, earlier also you have articulated to the fact that a new normal is being set in all the industrial chemicals. So, sir, if you could give us some more briefs, what factors have now led to believe that this is going to be a new normal? Because of what we have seen is that this logistic cost, the freight disturbances have been one of the major reasons for the increase in the selling prices. So once they get restored in the near vicinity, are things going to come down, or has there been a capacity that has been completely mothballed, especially in terms of TDI and all? So if you could give some more color on the same.
Yeah, I am Jiten Desai. As I have replied while answering the earlier question, that most of the products are import substitute, and currently there are very few projects for our key products, acetic acid or TDI, are coming up in the world because of the corona effect. And natural growth has also restored actually. After the corona, the recovery has started, and the natural growth which we have observed pre-COVID period is again restored. So to compensate that growth rate, there will always be demand-supply situation in the favor of supplier for the key products.
Right, sir. And you did mention that softness in the TDI prices. I missed the earlier commentary, so for the sake of repetition, also if you could give some more color, how there is any slackening in the price trend for TDI for this last 2 months?
Yeah, last 2 months is because of the demand weakening actually. The supply is steady, and demand because of the geopolitical situation and the cost have increased. The cost of life, normal life has increased in Europe and other countries. That is why the demand has gone down, and that is the effect on TDI price actually.
Okay. And what has been? Yes, sir. Continue, sir. Hello.
Hello.
Yes, sir. What has been the decline, sir? In percentage terms, can you give some more color?
Yeah, as far as numbers are concerned, I have already informed while replying earlier question that it has gone down in the month of May only. In the April, it was prevailed at a little higher range than what it was prevailing in Q4.
Okay. Right. Okay, sir. I'll come in the queue, sir, for the follow-up. Thank you.
Thank you.
Thank you.
The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, sir. So on this polycarbonate, have we tied up for some technology or we have our own technology? If you can give some color. And same thing earlier in earlier call, we had said that in some of the 4 or 5 products, we are the only sole manufacturer in India, and that cannot be, the technology is not easily available. So are we planning any brownfield expansion for the same product or?
I'm Vayan Patel answering your question. See, the technology sourcing mainly is a problem in acetic acid, but there also we are trying with some of the technology suppliers. Regarding polycarbonate, we are already in touch with some of the technology suppliers, and we don't face any issue regarding polycarbonate. Regarding other products, wherever we feel there is a scope, we'll be moving ahead. But mostly we will be needing technology support. Generally, we don't have our own technology, which is, no project is, developed on our own or R&D basis. So we will be in touch with technology supplier, and wherever it is available, we'll move ahead.
And do we think that some of the product where we are sole manufacturer, some other producer can also source the technology and set up?
See, this is always an open market, but mostly over a period of time we have acquired some expertise in handling some of the products. And because of integrated nature of our complex, we don't see any threat from any competitor in near future.
Okay, and so last question on Dahej as well as Bharuch, we have 2 sites. So do we have sufficient land for future expansion?
Yes. See, as far as Bharuch complex, mostly it is full. But still, some of the products which we are already manufacturing, we have certain room for, expanding the capacity, existing capacity. But any new project, brownfield project, we are planning at Dahej site, and we have ample land at Dahej site.
Can you spell out, sir, how much land do we have, and the power side, the scenario?
See, around 1,800 crore land is available at Dahej site. Power, we can always source from ZEDCO. Power is not a constraint for, anybody, such in Gujarat.
1,800 crore or 1,800 acres, sir?
1,800 acres, sorry.
Yeah, okay. Thank you very much.
Thank you. Ladies and gentlemen, due to time constraint, we take that as the last question. I now hand the conference over to the management for the closing comments. Over to you, sir.
Yeah, thank you very much. I'm Ashwin Shah. On behalf of GNFC management, we extend our sincere thanks for the support extended by the organizing firm, Prabhudas Lilladher, and our management team, as well as the valued investors for their unstinted interest and support in the capital of the company in making investment in this GNFC. So with these positive results and positive remarks from the investors, we declare this Concall meet as closed. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of IIFL Securities Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.